Hey there, this is Brad Gill of NextHome Lifestyles here in San Jose. Back again to share a quick update on our local real estate market here in Silicon Valley for the month of August. But first, I'm joined on this month's market update by special guest Adam Ayer of Wells Fargo Home Mortgage out of Los Gatos. He'll be providing some commentary on exactly what the economy has been doing to interest rates recently and how you can take advantage. Because this report is all about how home buyers can leverage current market conditions in their favor. Adam, why don't you take it away and let everyone know what's been happening to interest rates this month?
Thanks, Brad. It has been quite a wild ride in the financial markets lately. In response mainly to the trade war and the fact that inflation remains extremely low, the Fed cut the federal funds rate as expected in their July meeting. This had very little immediate response in the markets as it was expected. However, the next day, investors began to focus on the fact that the Fed was likely to cut rates again this year, and the 10-year Treasury bond yield, which is the index mortgage rates tend to follow the most, began to fall from about 2.04% to 1.5% in a little over 2 weeks. That is major, as the yield hasn't been below 2% since 2016, which is finally allowing interest rates to fall back to historically low levels. We are talking about a possible 1% drop in mortgage rates compared to the same time last year, and even lower for certain products.
That's great, Adam. Wow, 1%. So, knowing that rates are back to historically low levels, how can this help my clients?
Well, if you take a loan amount of $1 million, a 1% drop in rates can equate in some cases to an additional $175,000 in financing you can qualify for. Or for every $100,000 borrowed, that's a savings of approximately $550 per month. That is huge. So if you're still in the market for a new home and you haven't updated your pre-approval in a few months, it's a great time to find out how these low rates have improved your purchase power. And if you have purchased a home, then now is the time to revisit your mortgage rate and have a conversation about refinancing. This is especially true for people who have purchased in the last year, in 2018 and beginning of this year.
Great tips. Now let's shift gears and get into some market data with a quick discussion about supply and demand. First, we're continuing to see a downward trend in inventory levels with 2,138 units currently available for sale in Santa Clara County, down 7% from last month, but still up 5% from last year. And 1,100 units currently active in San Jose, down 6% from last month and almost on par with inventory levels from last year. Looking at buyer demand, last month at the county-wide level, 1,276 homes received a contract, up slightly 3% from June and up 6% from last year. And in San Jose, we had 692 new contracts ratified, up 8% from the previous month and 8% higher than the same time last year.
And at the mortgage level, we have seen an increase in both purchase loan applications and pre-approvals being issued this month.
So it appears that falling interest rates, which are improving buyer affordability levels, could be making a noticeable impact in our market.
Let's talk about affordability real quick. If inventory levels are beginning to fall and demand for housing is stable, are prices jumping through the roof again this year?
Well, not quite like we experienced at the beginning of 2018. Although our median sales prices for Santa Clara County are up almost 13% from the beginning of the year, they finally seem to have stabilized, as the median sales price for July just reported its first dip, coming in at $1,155,000, down 3% from last month. Of course, many could argue that this year's price appreciation is just a rebound, since the median sales price in 2018 did close the year down 20% from the exorbitant peak prices reached that spring. But given that we're now only off 3% from last year's prices, I would say that the market is regaining momentum, especially with the lower interest rates we've just been gifted.
Okay, Brad, so that's a lot of great statistics, but what is the data telling us? What can I expect if I'm thinking about making a move in real estate this year?
Well, number one, we're still in a seller's market. Although inventory levels are higher when compared to last year, in overall months worth of inventory, a popular gauge on the market, our levels continue to remain well below the 6-month mark in most price ranges. This statistic supports that we're still experiencing a seller's market, as anything less than 6 months is considered favorable to sellers. That being said, the housing market acts like a tug-of-war competition between buyers and sellers. With steadily declining interest rates, there has been and still seems to be enough buyer demand to support overall price stability. But this doesn't mean that a home seller can necessarily list a home at any price and expect to sell within a week. Current days on market has increased, and we're noticing a lot of price reductions for homes that have been sitting on the market and languishing.
So caution to home sellers. You may be surprised to find out that your home's value is not equal to what Zillow says. So always work with a knowledgeable realtor to ensure success and avoid lengthy days on market and price reductions.
That brings up point number 2. Market conditions for home buyers haven't been this favorable for a long time. Currently, active buyers have more inventory to choose from, the ability to lock in lower housing costs, and depending upon the days on market for any particular property, they have much more leverage this time of year compared to last. So, if the thought has crossed your mind, whether getting into your first home or moving up into your next home,
call your favorite mortgage professional and get your pre-approval updated. We're sure that you'll be pleasantly surprised. Lower interest rates mean lower monthly payments and an increase in purchasing power.
Then call your favorite realtor who will help you come up with the right strategy to take advantage of our current market conditions. Thanks for tuning in, and remember, a successful real estate experience always starts with the right strategy. Thank you again so much, Adam, for being on the show. We really appreciate it. Until next time.